Okay, ladies, I am Phoebe, and I am glad to have you joining me in the first episode of Phoebenomics, which I will be talking about all kinds of things that interest me personally, and that I feel I have learned about. And these things are really benefiting me. And I feel like these things, as a female, we don't get taught them often. We are exposed to our fathers, our husbands, our partners, our wives, if we have wives who talk about finances or are into that. We as most females, we we don't know about things like the Federal Reserve or fractional reserve banking, and all this just blows my mind. When I was so confused when my fiance told me that money is really just made up and it doesn't really exist. And then I was going through the economics class with my son when he was a senior, and it pretty much word for word same thing, and it blew my mind. And ever since then I've been on this kind of journey to learning how to control my own finances in a way that, not to say control like somebody else has control, but I mean as understanding the way finances work as a whole, and not just personally for me and my bank account, but how as a whole finances actually work. You may have heard that money equals power, and I plan on showing you that really, yes, money does equal power, because money translates into power in our society, unfortunately. And I'll show you that throughout these series, throughout the videos that I bring in this channel. I will hopefully show you what I mean by money as power. And if you understand finances, you have power over you and your financial situation. And I'm going to hopefully teach you about some things that you're hearing but maybe don't understand like I did. And I think what's even more valuable than money in life is knowledge. Knowledge really holds the power. When you have all the information, or you have more information, you can make decisions for yourself. And as females in our society, making decisions for ourselves isn't something that's really encouraged. A woman who is confident, who knows what she's talking about, so she's educated, or in any kind of way. I don't mean educated like you went to college. I mean like you just understand what's going on and you can talk about it. You don't feel like your partner is big talking you, okay? Because you can keep up, because you have knowledge. And so that is the number one goal of Phoebenomics, is to instill knowledge about all kinds of things. So right now we need to focus on what's current. And currently there is some things being talked about that maybe you don't fully understand, because maybe the people exposing you to it don't fully understand it themselves. Maybe they're scared and you know they're scared. But maybe they're scared for the right reasons, just confused on certain technologies or languages. So maybe as I'm learning, I can share with you what I'm learning and not manspeak it. So I'm not talking about mansplaining. I'm talking about manspeak. We have different vocabulary as women that we like to use to mean the same thing that men are saying. Men like to tell us to get to the point. I'm sure there's a man out there already who thinks that I should get to the point. But this is a channel for ladies, directed towards ladies, okay? These slideshows, these presentations are going to get cute, and they're going to be serious, and they're going to be fun. But I'm a female. I'm a lady. I have been educated. I love educating myself. I love research. So when my fiance gives me a topic that I don't know about, as scary as it might be sometimes, I love learning about it more in depth than maybe what I already understand. So in this first video, I want to take you through some quick overviews of some things that you might be hearing in your home or on reading on social media, or maybe your partner or your father or your mother or somebody in your life is talking about finances. Okay. I come from a lower class income. I was raised on food stamps and all those things. So for me, I've been sitting back watching the government do this and play these games with people's lives my whole life. I wasn't a privileged person. I suffered and struggled from food insecurities, electricity and gas being shut off, not knowing where the next meal was going to come from, how my parents were going to put gas in the car, pay for insurance on the car, have basic household utilities. I didn't come from a house with a computer and internet or a home phone, even routinely, on a regular basis. Those things were not available. So as an adult, I felt lost, and I still feel lost and behind in this digital world, and I'm just learning to navigate it at almost 40 years old. My fiance is really good at navigating the internet. He is really good at providing multiple resources, not just one person or one media outlet's opinion. And because of this, I have learned a lot, and I have been able to expand what I know in I know, and how I can change things for myself and maybe the people around me in my immediate presence, like my family. And so hopefully I'm going to clear up some things throughout these segments, these series, these videos, whatever you want to call them, presentations, about what is currently going on with our banking system in America. So in this first video, I want to cover briefly CBDCs, or central bank, sorry, I got distracted by the cats, central bank digital currency. I also would like to touch on the Federal Reserve, what it is, and who is in charge of it right now, or, well, okay, yeah, in charge of it. I would like to touch on fractional reserve banking. I know that's a term you've probably never heard till recently, because it's a big problem as to why, it is the reason as to why we have the problem we have right now with our banking system. There's no way around it. Plain and simple, fractional reserve banking is bad, just like CBDCs are bad. And I will tell you why. I'm going to try to keep the first video, kind of contained in time, make more. So those are 3 things I'm going to cover. And then I'm also going to talk about a little bit of Bitcoin and fiat currency. So I'm going to explain what fiat currency is in detail, because that is important to explain in this first video. If you don't understand what fiat currency is, you won't understand anything else I'm going to say. So let's get started. So today, on the first episode of Phoebenomics, we are going to be talking about understanding the Federal Reserve and digital currencies. And I have to say thank you to Canva for such an amazing software you have, and your Canva for Nonprofits. Thank you so much. So, introduction to Federal Reserves and the CBDC. CBDC stands for Central Bank Digital Currency, a digital form of fiat money issued by a country's central bank. It's not, and I cannot stress this enough, it is not the same as Bitcoin, okay? In our country, the central bank is the Federal Reserve, okay? The Federal Reserve, the central bank, they have the power to regulate all the money, print the money, and a CBDC would give the Federal Reserve, the Fed, the power to control how much money you actually can save, how much money you can spend, and it would also give them the right to freeze your money and not allow you to use it when you need it because there's a financial crisis. So anytime they desire to determine there's a banking financial crisis, they'll lock up your money and tell you, I'm sorry, I don't know how you're going to access your money. We can't let you have this money because the banks need your money. The rich need your money. We need your money because of the crisis. Thanks for the bailout. We'll let you know when you can eat again. Yes, ladies, I am going to tell you a lot of this sounds like conspiracy theory. It's really not. It's just my opinion supported by fact. Okay, so please take that into consideration. I'll put some links in the description of the video that you can check out, like Investopedia and some other people's stuff, to where you can get some other opinions. But it is true about central banks' digital currency. They give the government full access to your finances, which will force you to shop in certain marketplaces, buy certain things. Your favorite brands, you may not be able to buy them because the CBDC, the government, hasn't put that in the marketplace you're allowed to shop for. So, for instance, there's this Fed Now coming out in America later this year. I think it's June of 23 it's set to start. And it promises, we'll talk about it, but it promises like instant transactions, like no wait times and low costs for the people using it. It's like instant, right? I don't fully understand it. I don't think they fully understand it. I will link some information to that Fed Now program if I can find it, because I don't fully understand it, and that's something we're going to learn about together. They'll tell you that this Fed Now system is a good thing because it's slow, frees up the banks, it frees up big by slowing or speeding up transaction times, and it is a good thing. They'll tell you that. However, the Fed Now system will most likely evolve into, if you have food stamps, that's the only way you're going to get them, is their Fed Now system, which means most likely you'll only be able to shop from their online marketplace or app because that's their money and they want to control how you spend it. They don't want you to go to your favorite retailer and for your groceries with your food stamps, your SNAP benefits, your Supplemental Nutritional Assistance Program benefits, or your TANF benefits, your Temporary Assistance for Needy Families. That all will start to be issued through the Fed Now system, most likely. I mean, that's not written in stone. That is what it looks like is going to happen. That is a projection. And your WIC benefits, your SNAP benefits, your TANF benefits, your child support it's a federal program, so they might even be able to take your child support and say, okay, we're only going to issue it on this system, which is digital, on an app where you can shop from. So you'll never have to swipe a card because it's going to be digital and it's going to be instant. And it's kind of scary, right? But it's not the same as Bitcoin. They'll maybe want you to believe it's the same as Bitcoin and blockchain technology, but it's not. It's not. It's just not. So if you're getting concerned, you have a right to be concerned, ladies. These are the things that no one is talking about to you. Jerome Powell. Who is Jerome Powell? Well, he is our Federal Reserve chair guy. You know, the guy who speaks for the Federal Reserve. He's in charge. He is supposed to be making decisions that are good for us and our government. He's supposed to be the man in charge of regulating and balancing how the economy works, right? So Jerome Powell, he's important because he makes several statements about things I'm not certain he even understands. All right. I think these old guys need to really go away out of our government. I really do. We need fresh perspective. We need people who know what they're talking about. Because Jerome Powell's statements are absurd sometimes. And sometimes they're just correct, but maybe they're not said the right way or whatever. He's really on my bad side right now because of his view on how we should curb the inflation right now. And his stance is to curb inflation. We need 2 million more people unemployed. He wants 2 million people in America, 2 million American citizens to lose their jobs by the end of the year. And he says it's just the pain some of us have to endure. Who's enduring that pain? Is he enduring that pain? Is your governor enduring that pain? Is your senator, your congressman, your representative, are they enduring the pain? No. Who's going to endure the pain if you lose your job? You are. You stand to suffer. He doesn't. He only stands to suffer, and people like him, people in power, people with money, only stand to suffer if you work. Do you hear me? If you work, they suffer. You have money, it makes their money worth less. They don't want you on the bottom, the poor class, the class that nobody's talking about. The lower class, to become part of the middle class. So what do? They make it harder for the middle class to survive, and they make 2 million more people unemployed, and Jerome Powell just says it's just the pain we have to endure, or something like that. And he calls it a pain that we all must go through. You can Google it, you can find the direct quote yourself. Maybe I'll even link it for you. However, he wants you to become unemployed so he can maintain his wealth, or his buddies can maintain their wealth, or whoever in wealth can maintain their wealth. It requires you to be poor. No one in this country right now is hiding the fact, like they did when I was a child, that for the rich to be rich, the poor must be poor. So let's talk about Jerome Powell. Jerome Powell's statements on digital currencies. Jerome Powell has acknowledged the growing interest in digital currencies and their potential impact on the financial system. While the Federal Reserve is exploring the benefits and risks, there is no immediate plan to launch a digital currency. Blockchain technology is being studied as a possible solution for improving payment systems and reducing settlement times. Blockchain technology, although I don't fully understand the physics of the technology, how it actually, what the code is, I can tell you that last statement there, that blockchain technology is a solution for improving payment systems and reducing settlement times, absolutely. And we'll talk about why. It's because there's so many people involved with Bitcoin. I'll just put it that way to simplify it for now, that having the problems we have with our system now, they don't exist. And I'll touch on that later. So here we go. And so Jerome Powell, he recognizes that digital currencies and Bitcoin technology, blockchain technology, and all this it is coming in the future. That is the way of the future. The Federal Reserve, they recognize it. The government recognizes that digital currencies are the future. Okay. So let's talk a little bit about Bitcoin. This next couple slides are just a brief introduction, and I have a couple more. So Bitcoin and blockchain technology. Blockchain technology allows for secure and transparent peer-to-peer, so person-to-person, friend-to-friend transactions, business to business, without the need for intermediaries like banks. So what does that mean? That means I exchange money with my cousin directly through the blockchain on a public ledger without a bank in the middle. I know that's confusing, right? Did you realize? I mean, you all have to realize that your debit card is putting your bank in the middle of your transaction, right? You're checking your checkbook when you write a check. It puts your bank in the middle of the transaction. So you put money in your bank, and then you go and you use your debit card at McDonald's. So then your bank needs to pay McDonald's. You're not directly paying McDonald's. You're authorizing a transaction on your bank account for your bank to pay McDonald's what you just paid them. So there's a bank involved. There's a third person. Imagine that. When you hand money over, unless it's like a cash transaction, everything we're doing is putting a middleman in there. I'm not just directly giving my debit card to my cousin, and that in turn is $20. No. I need to physically transact that $20 off that debit card to her using a banking system. Bitcoin, blockchain technology eliminates that third man. So what are the implications of digital currencies on the economy? Digital currencies like CBDCs, Bitcoin, and blockchain technology challenge, and I mean literally challenge, traditional banking systems, requiring new regulations and adaptations. Absolutely. The future of digital currencies in the Federal Reserve. Digital currencies like Bitcoin and blockchain technology are transforming the way we think about money. 100%. The Federal Reserve is exploring their potential impact and role in the future of finance. So, let's talk about fiat currency. What is fiat currency? It's a type of currency that is legal tender chosen by a government, okay? In America, it's the US dollar. It has no intrinsic, so essential value. The value of it's made up. Mind blown, right? The value of the US dollar is made up. There's no essential value to it. It is the legally accepted way to pay government and private debt. It does not have a fixed value because it is not backed by a tangible asset, a physical substance, such as silver or gold. So let's break that down. It has no intrinsic value, no essential value. The only people it has value to is the people who say it has value. And who says the American dollar has value? The Fed. It is the banks. Let's just stop saying the Fed. Let's just say the banks. The banks determine its value. Okay? And I'll show you how. But the Fed, the banks, they're all working together to set the value of the US dollar. And when they mess up big time for you and me. The legally accepted way to pay for your government debts in this country is the US dollar, which means Bitcoin, you can't use it yet. But it's also it's not a tangible asset. So whereas it used to be backed by silver and gold reserves, but mainly gold reserves, it's not anymore. So gold is valuable and silver is valuable because it's a depleting asset, right? How much gold there is in the world is how much gold there will always and forever be in the world. That's it. Plain and simple. Fiat currency is not the same. Fiat currency gives the central banks, i.e. the Fed or Reserve in this country, control over the economy by allowing them the power to determine how much and when to print the money. In America, the Federal Reserve Bank is our central bank. So the Federal Reserve Bank in America can print money to stimulate the economy as much as they want. There is no finite, no end supply of our American dollar, which makes it so, when it's in such a high quantity out there like it is now, there's so much of it in the system being used. It's circulating, it's flowing around our country. People are buying things, they're accessing services. For once, poor people actually have a chance to be middle class. Well, that's caused a problem for the upper class. Their money's not worth as much because we've printed too much. So since there's so much supply for money, American dollars, the US dollar, the supply is so high right now, it's not valuable. Fiat currency isn't backed by silver or gold or any other physical asset. It loses. It always has the risk of losing its value because of this. I see the typo, don't worry. This means that in America, the $1 bill you hold may represent $1 to you and always be that to you. Its actual value to our government and others may be only 93 cents, just for an example. That means for every dollar that you're holding, it's worth 7 cents less than what you're actually holding in your hand. So that takes more of those dollars to pay for the same good or service that a month ago was $1 less. Does that make sense? So if your dollar you're holding in your hand is worth to the government 93 cents, of course, prices are going to raise at the grocery store, raise on the rent, raise on everything else, because it's going to take more of those dollars that you can, more of those dollars to equal what $1 did a month ago, for instance. And I'm sure if I'm explaining this any way wrong, the men that do decide to chime in, they will let me know in the comments. And I'm fully prepared for mansplaining in the comments. So please, guys, if you can explain it better, do so without being rude. Okay? But remember, most women don't have the level of education that a lot of men have been given the opportunity to have. So if it sounds like I'm oversimplifying it, or maybe it's not how you would say that, remember that my audience is women. Women who may have never, ever, ever heard any of this, including myself. So I explain it the way it makes sense to me. So if you're going to tell me how I'm wrong or point out where I need to get the facts correct, please put them in the comments nicely. That's all I ask. So what does it mean for fiat currency? Since a government can print as much as they want whenever they want, this leads to hyperinflation. It means goods and services have to increase because there is too much money in circulation. Hyperinflation leads to people losing faith in the American dollar, and the currency, the American dollar, becomes worthless. So even though you can hold it, you may no longer be able to pay your bills with it, because at some point, it's just going to be worthless. It won't mean anything to the American government. It won't mean anything to your peers. It won't mean anything to the people you need to pay your bills to. And that's why the Federal Reserve wants the CBDC so bad, is so that they can pump money in when they want and then halt the brakes on it for the poor, let the wealthy still have access to their money, but tell you have to go hungry. And then when you're relying on food stamps, when you're relying on WIC, when you're relying on TANF, they'll tell you to pick yourself up by the bootstraps, work harder, and if you want it, you can achieve it, while they're sitting at their tables happy and fat and their children do not suffer. Thanks for listening to my rants. Fractional reserve banking. How banks make money. Ladies, right now, the bank runs that you're hearing about, SVB Bank and all those other ones, I don't even, Signature and whatever. Those banks right now, you want to know what's going on? Let me tell you, this is what they really don't want you to understand about money. How banks make money. You heard that. Fractional reserve banking, how your bank makes money. The concept of fractional reserve banking is completely new to me. Again, if I'm misspeaking, if my facts are wrong, please let me know in the comments. Kindly practice it. Got it? You don't have to be condescending. You don't have to be a jerk. Comments, welcome. Discussion, welcome. Rudeness, not tolerated. We're all adults. Let's act it. Fractional reserve banking refers to a banking system in which only a fraction of the deposits are kept as reserves. Ladies, this next part is my words completely. This means that only a percentage of what you deposit into your bank account is actually available to you to withdraw. This allows banks to create money whenever they want to. More importantly, it's with every deposit. They can create an endless amount of money right out of thin air, and this leads to inflation and bank runs. Depositors, you and me, and then businesses like Roku, Starbucks, McDonald's, you name it, everyone uses a bank if they have a business. Okay? Oh, unless they're in the cannabis industry, and since it's not federally legal, they can't put their money in the banks. So, yeah, that's not cool. But maybe for them, it's actually a benefit at this point. Who knows? Maybe the cannabis industry will actually come out in the long run on the positive because they didn't get to invest or put their money into banks. Okay? Maybe. So back to this. Depositors provide funds to the banks in the form of deposits. So we put money in our checking account, we put money in our savings account, we put money in this savings, that savings, whatever. But we make deposits to the bank. That's how they get money. The bank then takes a portion of the money that you deposit. You heard that correctly. They take a portion of the money that you deposit into your account so that they can loan your money to other borrowers, right? So other customers get access to your money. They take a part of your money and they give it to another customer or more than one customer, how you'll see it plays out in later episodes, how your money might go to 5 different people. And you only have it's 10 to 20% in reserves depending on the bank. So depending on the bank, they may only have 10% of your money at all times on hand. Think about that. You have $2,000 in your savings account, but they only may have $200 on hand if they're one of the banks for a 10% reserve. Okay? So that's crazy. Central banks regulate and supervise the banking system. So in America, the Federal Reserve, Jerome Powell, that group of people, they regulate the U.S. banks and how the money is reserved and is spent. And it's like it's supposed to be an oversight, and they're supposed to keep the banks accountable and make sure that the bank sheets match the deposits and that these companies could be solvent, which means that they could pay you out. They could pay every one of their customers out. And make you whole if every customer came to withdraw their money that day. Can the bank pay out? And so our Federal Reserve, our chairman, Jerome Powell, that whole group is supposed to be making sure that your money is safe in the banks that you put it in. So when a company is insolvent, that means they can't pay you out, right? So if you go there requesting your money, they should be able to be solvent and make you whole, right? Because you believe that all $2,000 is there and you are going to have access to all $2,000. Now, I know this is a low number and it really doesn't apply to a lot of what you're seeing, because these are using big deposit accounts like the SVB and Signature. They're talking about big deposit accounts. And what they're so concerned about is that these accounts had deposits greater than the FDIC insurance rate of $250,000. So those people who deposited all that money into one account to pay payroll or whatnot, they stood to lose all this money when the bank executives made bad decisions and spent your money in the wrong way and spent their money, their customers, their depositors' money in the wrong way, and couldn't make every one of their customers whole the day they showed up to withdraw. And that is because of fractional reserve banking. Those banks only had to have a small percentage of every dollar deposited actually on hand to pay out. So that makes them insolvent. They can't pay everybody, right? So you might have heard about FTX and Sam Bankman-Fried and that whole fiasco. It's the same thing, okay? There's no difference. What happened in the crypto world with FTX and Sam Bankman-Fried and what happened with this most recent bank run, and what seems to be happening around the world with these bank runs, is that people realized, whoa, this company, this bank's value is going down. I need to get my money out before they go and close their doors. And that's the level of fear for these people when they see those stock market tickers start going down and that company's losing money. The big depositors want their money out, as we, as little depositors, would want our money out. So they show up, they go to get their money, and it's not there. Why? Because the Federal Reserve says that the banks only need to have a fraction of what you deposit on hand at any given moment. Now, they will tell you that there's some pros to this, and they will say that it increases money supply. Yes, because we can print money in a moment's notice from nothing. They'll tell you that it enables banks to provide loans. Absolutely. But how many of you have bad credit, low credit, no credit, and need a loan or a credit card, but you can't get a loan or a credit card from your own money that you deposit that they're going to give to somebody else just because they might have a little bit more credit stability in their eyes. But it's okay to take your money and give to that other customer. But you can't get a loan even though you deposit money into their bank. So your deposits may not ever come back to benefit you. They may always just benefit the people who are in a better situation than you. What are the cons? Well, okay, and first, also, it says it maximizes interest earned. Well, yes. However, there's a little loophole to that. It maximizes the interest earned for the bank, not you. You get a small percentage if you have your money in an interest-bearing account, which is rare for people like you and I because we don't deposit a lot of money or keep a huge amount of money on hand. So when that happens, you get a little percentage, a little fraction of the interest that bank is actually being paid to have your money in it. And the bank actually makes money off of interest by buying bonds and mortgage-backed securities, which is a whole totally different topic for a different video. Don't get me started. Mortgage-backed securities and bonds pay your bank interest. Your bank, if you have an interest-bearing account, will then give you a small fraction of that interest back as a bonus for holding your money in their bank so that they can make more money off of you. Just how it is. It's the circle of banking. Not the circle of life, the circle of banking. So what are the cons? Now, the cons are great. As you're seeing, it's affecting us greatly. Our grocery prices are higher. Our gas prices have been up. Everything is higher. Services are higher. Everything. But I'm going to tell you what. If you just hold on a little longer, those of us who are used to being poor, you just hold on a little longer. You keep working. Don't let them win, because this will be the norm and it won't feel so bad pretty soon. Give it about 6 months. We'll be used to all these prices and we'll be like, oh, this is cool. Because you know why? We know that when these prices go up, it means poor people are working. You and I, ladies, are being offered more jobs. We're being offered competitive wages, even though we're still not being offered as much. So prices go up because of fractional reserve banking. No other way around it. It leads to economic instability, as you're seeing and hearing on the news. It leads to inflation and bank runs. Regulation and oversight are essential to prevent this abuse and protect you and I, right? Who's protecting us? Jerome Powell's supposed to be protecting us. Him and his little buddies up there in the Federal Reserve are supposed to be protecting us from this stuff. But yet Jerome Powell wants more of us, 2 million more by the end of 2023, to be unemployed to stop inflation. He wants you to be poor. Poor people must be poor to stop inflation. Regulations on fractional reserve banking when fractional reserve banking is a system where banks only keep a fraction of their deposits and reserves. I've said this a couple times, multiple times. You just got to drive it home. You have to hear me. Regulations require banks to maintain adequate reserves to cover withdrawals and prevent bank runs. Bank runs are another term for a bank that has the potential to be insolvent, right? So that's not another term. It's just what people do when that bank has the potential to be insolvent and not be able to fulfill the withdrawal of every single depositor. A bank run happens. People mad dash to the bank. They go to take out their money. It's not there. And then what? Well, it's what you're seeing on the news. Central banks' digital currency are the future of money in America? I hope not. However, with the FedNow system and the way it's going and the talk about the acknowledgement that digital currencies, I can see it. I want to let you know that this is similar to things like in China, where all the money is in an app and you buy everything through an app and the government can freeze it. So you want to know what the American government wants to do with your money? Well, it's exactly what China does with their money. Just plain and simple, no way around it. Federal Reserve is studying the benefits and risks of CBDC and exploring the potential impact on monetary policy, financial stability, and more. They say that the benefit of CBDC is that it can increase financial inclusion, which I'm not sure, and I do agree with. I think I agree with this. The people who say it exact opposite, but this is just both sides of the argument. As I like both sides of the argument to be shown so you can form your own opinion. CBDCs can increase financial inclusion, reduce transaction costs, enhance payment efficiency, and provide safer and more secure way to store your money. The safer and more secure way to store your money is not with the government having full control, access, and oversight of where, how, and how much, where you're spending it, how you spend it, and how much you're spending of it. The role of the Federal Reserve in the CBDC. The Federal Reserve is exploring the potential benefits and risks of central bank digital currency to monetize the U.S. payment system. I've already talked about that. Implementing a CBDC could lead to financial instability. Remember, I was telling you I didn't agree that it would create stability. I thought it would make it unstable. It makes it more vulnerable to cyber attacks. Absolutely. It makes you more vulnerable to privacy concerns. Who's going to be able, anybody can spoof a cell phone. Anybody can spoof anything digital. You just got to get close enough to somebody. So are these digital assets really going to be secure if anybody can access them or see what you're doing with them? It requires and unequal access to banking services. I agree with that too. I think that this is going to be something that's forced upon the poor to use, and the wealthy are going to be excluded, and it's going to keep the poor out of traditional banks and the traditional banks for the wealthy only. Meaning you will always be poor with no chance for improvement on yourself because your government wants you and needs you to be poor for them to maintain their wealth status and wealth gap. So we're going to unleash the benefits of Bitcoin now. And I'm going to get more into this in several segments later where I just wanted to crunch a lot together. And I'm not going to be editing myself to make myself sound smarter. I'm leaving all the mistakes I say in here because I'm a human. I make mistakes. I'm not a computer. Unleashing the benefits of Bitcoin. I love Bitcoin. I tell you what, Bitcoin has become a way for me to save money and learn about investing. So what's true and false about Bitcoin? Your savings are in Bitcoin because instead of putting it in the savings account, you decided to buy yourself some Bitcoin. You're going to take that $20 and you're going to turn it into Bitcoin. It's not that you're buying it. You're going to exchange it like a currency exchange. You're going to exchange the $20 fiat money for $20 Bitcoin blockchain technology cryptocurrency. While, yes, that cryptocurrency that you're holding, that Bitcoin, that small amount of Satoshis that you're holding, the value of those could go down, and it does go down with the market. However, the market goes down when people lose faith, just like on Wall Street. The more people who decide to exchange their fiat currency for Bitcoin currency drives the faith of Bitcoin up, which has been happening since the bank runs, and we see the price of them Satoshis or those you can't say a whole Bitcoin because, well, you don't have a whole Bitcoin unless you do have $28,000 to buy a Bitcoin right now. However, you do hold Satoshis, which are fractions. Think of them as pennies, okay? Pennies are a fraction of $1, and Satoshis are a fraction of a Bitcoin. Now, I can take and buy $20 worth of Satoshis and hold that, and tomorrow it might be only worth $19 in Satoshis, right? It's only worth $19. Those Satoshis are worth $19, that's it. But tomorrow's tomorrow. Those same $20 worth of Satoshi that I bought that just went down to $19 might be worth $30. Now, in a smart world, we would see that that's the trend and that's going to happen, and that Bitcoin's been $60,000 before. And as people, more and more people learn that the banks can just print whatever they want, but Bitcoin can't because there's a finite amount. Hear that again. There's a finite amount. It means it will end production at some point, and then what is in existence is existence, just like gold and silver. Okay? I know it's a lot to take in. Don't worry, I have a lot of presentations for you. So let's get started with Bitcoin. So anonymity and security. Now, this wording is, I used Canva to help me put some of this together, and I like their wording, and I do want to correct something about anonymous. It is anonymous unless you're KYC'd. Know your customer. So it means you've shown your ID, you've given your social security number. Your wallet address is always going to be on the public ledger, okay? So I know what wallets exchanged monies by just going to a certain website, and I can see every single wallet on the Bitcoin ledger. The beautiful thing about Bitcoin is it's a public ledger, all right? There is no bank telling me this is how much I have and this is how much you have. No, 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 no. It's a public ledger. So we all hold each other accountable. We all say, okay, well, this is how much I have. This is how much you have. That's how much he has. We all agree. Our wallets are there. We don't know usually who owns the wallet. Because you can just have your wallet address be what's shown. However, the government knows who owns those wallets. Public ledger may not know your name or whatever. I don't know. I haven't seen it recently, but it may not list your name and address and all that, but the government knows that it's your wallet. Unless, that's if it's in a hot wallet with where your KYC, your ID, your social security number. Unless you have a cold storage wallet, which is just literally a wallet address where you can send your cryptocurrency to for your Bitcoin to. Your Satoshis to, and it stores your Satoshis until the day you're ready to cash out. The day you're ready to cash out, you put it into a hot wallet, you cash it out. Okay, I know, too much. Well, went too far. Okay, back on track. So anonymous and not anonymous. It's a dual-edged sword there. But it is decentralized. What is cool about decentralization is there's no one person or entity or business or anything, okay, that benefits from this. We all benefit. We don't have a banking system that regulates how the money's spent or says who can have access to what. Or we don't have a banking system paying the bills or, in between. It's direct. It's peer-to-peer. It's decentralized. Every miner who mines Bitcoin makes the Bitcoin blockchain technology safer, secure, and faster. Plain and simple. Bitcoin miners who set up Bitcoin mining farms are helping to expand and decentralize the network, making it more secure, safer, and faster for all of its users. Which, as you can see, it's why it's a popular choice for online purchases, and it has become increasingly popular for money transfers, especially during the Ukraine war. The benefits are that it's a decentralized currency. It's not controlled by a government or a financial institution. It's fast. It's secure. The transactions have low fees. Yes, you pay a small fee, but the fee helps the miners make a little bit of money for securing your network. It helps the pools that the miners pool to make a little bit more money. Now, I'm sure I'm saying that wrong, and I'm sure there's going to be someone who explains how I'm wrong on that. Probably my fiance when he watches this, if he watches this. But Bitcoin, what makes Bitcoin so beneficial is this last point. I can't stress this enough to you. Limited supply, providing potential for increased value over time. Just like gold and silver, as they become more and more scarce, their value go up, right? Their values increase. So if you spent $100 on gold yesterday, tomorrow that $100 on gold might be $300 in the matter of 24 hours. Now, I know that's wishful thinking. I know. Get off the naivety. Don't be so naive. That's wishful. I get it. But that's the point I'm making. I think it's 21 trillion Bitcoin in supply. Let me double check let me Google real quick. How many Bitcoin will ever be made is infinite. It is already decided. There will never be any more of them made in circulation. It's 21 million. As of March 2023, 19 million Bitcoins are already been mined as of March 2023. And let's see how many ever Yes, I was correct. After the supply of Bitcoin reaches 21 million, there will never be another Bitcoin mined. Do you understand that? Unlike the bank that can print $30 million today and then tomorrow print $30 million, and then the next day print $400 billion, and then the next day they print $780 trillion. No. They just keep making more of it, so there's an ever-growing supply. Bitcoin's not like that. So what happens? As Bitcoin gets closer to being all mined up, the value is going to go up because there'll be all that's ever going to be created completely in circulation. There'll be a demand for it, but the supply will be limited. It's simple supply and demand. Low supply, high demand increases value. High supply, low demand decreases value. High amount of American dollars, low demand for American dollars decreases the value of the American dollar. Decentralization. Decentralization of Bitcoin means that transactions are secure, transparent, and most importantly, tamper-proof. You cannot tamper with a Bitcoin transaction. All right? You could put the wrong wallet address in and send it to somebody you don't know. You could give somebody the wrong wallet address and have money. The Bitcoin they were supposed to send you go to somebody else's wallet. And guess what? There's nothing you can do about it. Why? Self-accountability. Being decentralized means we all take accountability for our transactions. No one entity is saying that we can't even make those transactions. They can't help us back out of them if we make a mistake. Now that is a con, but it's a pro because guess what? It's secure. Somebody else can't intercept that transaction. So let's say I put the wallet address incorrect, which I suggest if you're going to put a wallet address in, you check it 30,000 times if you have to, okay? Just as much as you can. Make sure every letter, everything, number, word, whatever it is, matches, okay? And always remember, not your keys, not your crypto. If you sign up for a wallet and you don't get 12 to 16 randomly generated words that make absolutely no sense when you put them together, you do not have the keys to your crypto and you do not want that. That way, if you don't own the keys, it isn't secure. It's somebody else's money. It's like giving the bank access to your money at that point. The bank owns your money. You count on them to have it. They only have to have a fraction. In that case is FTX. You want to talk about cryptocurrency? That's FTX. Okay? FTX, they had people put their money in. It was an exchange. They were supposed to be exchanging all these cryptocurrencies for people. And when it came time for everybody to pull out their money because they smelled trouble in that company, SBF, Sam Bankman-Fried, him and his company, FTX, could not make their customers solvent. They could not make them whole. There was not the money there because they followed the Federal Reserve standards for banks and did fractional reserve banking with their cryptocurrency exchange. So they took your money, lived a good life, and said F you when it was time to pay the bill. Tamper-proof, secure, transparent, decentralized. Nobody holds the access to your money except for you unless you send it to the wrong wallet. Only downfall. It's fast and cheap. Bitcoin transactions are fast. They're cheap. They do not require banks, intermediaries. They do not require high fees. Because there is so much, many people mining and the network is growing. It's so decentralized now that the fees are even smaller. Okay, so the fees used to be really high, especially for Ethereum, and that's something totally different. That's not the same thing as Bitcoin. It's totally different, but it's an example I can use for cryptocurrency. It's like, Ethereum has these crazy high fees that makes it impossible to use their network for someone like me. Bitcoin's not that way. We all can use Bitcoin. Say again, secure, transparent, public ledger, no banks, it's decentralized. No one person stands to benefit from your money. You control how you spend your money. You control where your money goes. And there's no more ever going to be produced. However, your Bitcoin, your Satoshis, do stand the chance to raise in value as the scarcity gets, larger. As the more Bitcoins are mined, means the less in circulation, or the more in circulation. Well, once it's all mined, sorry, I need to stop. Once it's all mined, that's it. It's done. What's in supply? 21 million Bitcoin. That's it. That's all that will ever be in circulation. Those 21 million Bitcoin are going to be in demand, which is going to drive the value up. And the value is already going up since the bank runs. That's just what I've been watching. I do invest in Bitcoin. I do save my money. My savings account is Bitcoin. I do need to be completely honest here. None of this is financial advice, only financial education, using myself as an opinion. Cannot stress this enough. I am not a financial advisor. It's all financial education. So I save my money in Bitcoin. Now, I don't have a lot in there. But the Satoshis I do own, those fractions of Bitcoin that I do own, that I do hold, that are worth in the one wallet, I don't really have much because I don't have much money. The one wallet I have about $22, but that's all money that I earned day trading. So I originally took like $10 and bought myself $10 of Satoshis. And then I spent all day on Cash App using their bot to experiment with auto trading of my Bitcoin, and I set it up to sell and buy for a couple days in a row, and I ended up making $7. So my balance is up to $17.60 something, and I took the initial $10 that I originally invested out of the Satoshis and put that back into my checking. And then I left the $7.60 something that I had earned profit in day trading, left it there, and that is got up to $11.26, and I just decided that, well, you know what, I have some money in my bank account. I think I will I want to save $10 this week. Maybe I will go ahead and put that $10 that's in my checking into my Bitcoin, because I want to practice with my Bitcoin being my savings account, because I don't trust the banks. And this is just me and how I'm doing it. Well, the thing is now my Bitcoin that was $21 when I added the $10 a few days ago is now almost $23. So my savings, just like your savings in a checking account or a savings account, has the potential to gain a little bit of interest. My interest goes faster. So every time the value of Bitcoin goes up, my value of my Satoshis, my fractions go up. So my bank account, I can't call it a bank account, my wallet gets fatter without me doing anything, just like your high yield interest savings accounts or your stock markets. A company that if you're invested in it hits rich on the stock market. Okay, it's the same thing. So Bitcoin's global acceptance has made it easier to conduct cross-border transactions, which the American government hates, without the need for the banks. This saves time and money. Yes, when we can cut out the bank, cut out the government, it saves everybody time and money. And that's why the government hates it, because they're not getting their fair share. So in conclusion, Bitcoin offers low transaction fees, decentralized control, pseudonymous transactions, right? Pseudonymous, sorry, I should have broke that down earlier, but I think that pseudonymous works in a great way, and let me just get the exact definition for you, in case you haven't heard this word before. And that's a lot of the problem with a lot of the men who explain finances, is they continue to use the big words that maybe we haven't heard before, but maybe because poorer communities, we're not as educated as well either. So our vocabularies aren't as big because they don't want us to have big vocabularies, because we're meant to serve the people with the big vocabularies. We're not meant to be on the same playing field. If we're as educated as them, we have power. Pseudonymous, for people who don't know, means writing or written under a false name. So it allows you to use a false identity per se to hide your transactions. It keeps it anonymous, all right? It's that wallet address protects you unless you're KYC'd. And protection against inflation, absolutely. Your Bitcoin will never lose value because your groceries go up, okay? Your groceries go up when the American dollar loses value. Bitcoin will never, ever, ever cause your groceries to raise in price. You will never, ever, 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 ever cause your gas prices to go up or the license plates that you buy to go up. Bitcoin will never be the cause of inflation. CBDCs will. Fractional reserve banking is always going to. It's a controversial way to bank anyways. There's a lot of research supporting that. But Bitcoin, blockchain technology, it will never, ever cause inflation. However, the value of it goes up, which may make your personal wallet inflate. But hey, when is your personal wallet ever inflating a bad thing? Well, when it impedes on the rich people's ability to pay their bill. When their millions aren't worth millions anymore, and they can't repay the banks, or the banks ain't getting paid back at the right rates, like for instance, loaning out loans during the pandemic at interest rates near 0%, and then interest rates being what they are today, the bank's losing money because, yeah, you can see 0 and 8 is a huge difference. So Bitcoin allows women like you and me who otherwise rely on things like food stamps, all that, to take control of our finances. However, if you KYC, and I will talk about cold wallet versus hot wallet, if you KYC, you will not be able to get food stamps in this country, at least in my state. They knew that I have penny stocks, and they knew that I have cryptocurrencies, and they told me that I needed to sell them at a loss before I could have SNAP benefits, which I don't think is right. So, ladies, please stay tuned. I know this one was long, but it's kind of like cramming a lot of stuff together. I hope you've learned something. I hope men tune in. I want this to be for women, but maybe there's some men out there who are just like, I have no clue what's going on. Can somebody dumb this down for me? I mean, like, not dumb it down because I'm dumb, but like, dude, these guys, they don't talk about it the right way. Please, somebody simplify this for me. Please speak my language. If you're one of those guys, I get it, all right? Guys, educated males are confident males usually, and they speak in an educated way, and to us it comes off as condescending, like they don't think we know what they're talking about. But honestly, we do. We just need to explain a little bit differently. Some people aren't so nice, and they may call us dumb or stupid or ignorant or uneducated. But others, like my fiance, he loves teaching me and other people through giving resources and showing us multiple resources and outlets. I know this was long. It's unedited. It's live as far as me doing the presentation live and recording, and it's unscripted, and I'm not going to edit it, and I don't care that it's over an hour long. I hope you enjoy it. I hope you've learned something. I will most likely have another presentation for you later this week, probably around Thursday. I have some things to do tomorrow, and on Wednesday, I'll probably spend some time recording the next several presentations to just kind of get them up. But I wanted to do this one right away, today, in the moment, right before it goes live on YouTube. And you know what? Like, comment, subscribe, share, do all those wonderful things that I need you to do in order to build this channel. If you learn something and you're a lady, share it with your lady friends. If you learn something and you're a lady, share it with your man friends. If you're a man and you learn something, share it with your lady friends. All right? I hope you all learned something. I love you all. I will see you again later this week. Have a great day.